Okay. Hey traders and investors, my name is Serge Berger and I'm the founder of thestudytrader.com. I think you made a great choice to attend this webinar today. What I do is I help traders and investors reach consistent profitability. For example, did you know the main reason why traders are not making money is because they actually just overcomplicate things? That's right. In my experience, most people make things much too complicated. So today, I'm going to show you a highly profitable three-pronged trading approach that has not only made me a lot of money over the years, but it's also already allowed hundreds of traders just like you to reach a state of consistent profitability. So for example, how would you like to be able to get up in the morning and not care which direction the market is heading because you know you have a simple, trustworthy, and repeatable process that consistently keeps you on the right side of the market? Furthermore, how would you like to be able to do this, say, from your beachside hotel room in Hawaii or your slopeside hotel room in the Alps? Well, that sounds a little bit silly, right? But it's actually a very realistic lifestyle to have if you follow this straightforward three-pronged trading approach that I'm going to show you folks today. Well, financial freedom is what many traders aspire to, and my three-pronged trading approach has allowed me to live a wonderful lifestyle where I spend part of the year in Florida, where I'm actually at right now, and the other part I spend in Switzerland, and I do a lot of traveling also for work. Well, success as a trader really isn't that difficult, and with the approach that I'm going to show you guys today, I know that everyone can do this. Okay, so this is just a quick introduction on myself. If you have never heard of me, again, my name is Serge Berger, and I've been very fortunate throughout my career to have worked both on the buy side and the sell side of Wall Street, so places like JP Morgan and family office and things like that. And what that's done, it's allowed me to see, you know, various different instruments or different asset classes, if you will, from fixed income to derivatives to equities, and so on and so forth. But it's also allowed me to see and work with some of the very best traders in the world. And I'm now very fortunate to be able to pass that knowledge on to not only my own subscribers and my direct clients, but also to the broader audience such as yourself. All right. So like I said in introduction, I'm all about keeping it simple. I think most traders and investors overcomplicate things dramatically, and they do that by looking at too many conflicting data points, especially in this day and age of, you know, text messages and all sorts of things that pop up on our phones and our screens. We have to be able to eliminate that noise. That really is important. Which is to say that the more straightforward that your process is, the easier it will be for you to be able to stick with it. Let me say that one more time. The more straightforward that your process is going to be to investing or trading for that matter, the easier it will be for you to be able to stick with it. Think about that. The very best professional traders have a very simple but a repeatable process. In fact, the two very best traders that I know only focus on one or maybe two types of setups, but they get really good at those setups. So if the very best traders only focus on one or maybe two strategies or a handful of stocks, if you will, then why do many private traders think they need to become a jack of all trades when the pros don't even do that, right? So the key to success, in my opinion, is to become an absolute expert at one or maybe two types of setups, and then you look for those across the universe of, say, stocks or indices and even other asset classes like currencies and futures if you choose to do so. So institutional traders tend to have a very simple and repeatable process. And what I'm going to show you guys today is a highly effective and repeatable three-pronged trading process that I know everyone can do. And I'm going to make a very big claim once again today. Are you guys having sound issues? Just to make sure, if you hear me, please type in yes. Sorry, I'm having a couple of people saying they have no sound. Yep, everything good? All right. Anyway, so I've made this claim before in this webinar, and I'm going to do it once again because I see so many people walking away with this. I think it's literally going to change the way that you look at financial markets. Okay, so let's get started. quickly on the agenda, what I'm going to explain to you today is why identifying investor mood or emotions is critical to success as a trader and investor. And I'm going to show you how to consistently find the highest probability points to buy any given stock, index, commodity, or currency for that matter. And then we'll tie all this together and show you some great examples of this three-pronged trading and active investing approach. Okay, so I hope you guys are excited. Let's do this. Okay, so when we talk about candlesticks, it's really, really important to keep it simple because there's way too many candlestick patterns out there to learn them all. I'm sure some of you guys that are familiar with candlesticks, you've come across books that are, hundreds of pages long, and they talk about all sorts of candlesticks. And to be honest with you, most of them actually are not really worth knowing because they hardly ever show up. So shocking as it may sound, I just like to use the most profitable ones and the ones that actually work on a repeated basis. Okay, so let's do this. Let's go through and let me just show you guys the basics of what a candlestick looks like, and then we'll start getting into the real meat of the presentation. Now, it's important to understand that candlesticks work in all time frames. It doesn't really matter whether you're looking at this on a daily chart or on a weekly chart or on a 5-minute chart. It really doesn't matter, and it works for all asset classes. Okay, but for today's presentation, to keep things uniform, I'm going to focus on stocks. Okay, although I'll show you guys examples in other asset classes later on, and we'll focus on the daily time frame. And again, I will show you guys other examples in intraday and other time frames later on as well. But for right now, let's keep with stocks and a daily time frame just to keep things uniform. Well, like with anything, you can either have an up or a down day, right? So let's just start with the candle here on the left-hand side with the sort of filled or black body, and you can see on this given day we had an open here, so the stock opened here for the day, but it closed lower. Right, but on the intraday basis, it actually extended and rallied all the way up here and fell all the way down here. Well, the inverse of that would be an up day, right? You had a stock that opened trading here for the day, closed here, so it closed higher on that day. But again, an intraday range that extended above the close and below the open. So what we end up having here is this sort of 4-point relationship, this high to low to open to close. And to me, the close is by far the most important point that we need to focus on. Okay, so let's continue. One of the other things about candlesticks are so great is because they're very, very visual. And if you look at various academic studies out there, you can see that about 60% of us have an easier time learning stuff by looking at a series of pictures. Who in here would consider themselves to be a visual person? That's the right brain, it's the creative brain. And I'll tell you, actually, it's more like 80%. I've done my studies on this with my client base, and it's really more like 80% of people. 80% of people have an easier time learning something if it's explained to them through a series of pictures. Like, for example, if you ever put together one of those IKEA furnitures, you'll see that there's a very basic instructions with these little dudes that you just have to follow and see what they do, as opposed to a written instruction, right? And people have an easier time understanding something that way, and it has nothing to do with intelligence. Just we tend to be more visual, and candlesticks are extremely visual, which is why there's such great benefit to us if we use them correctly, and that's what we're going to do here today. Okay. So the benefits of the candle are as follows. Obviously, they're much more visual than your typical bar or line chart. They give us a clear visual representation of what's taking place on the chart, of course, but most importantly, folks, and honestly, this is one of the biggest takeaways I'd like for you guys to write down. Maybe take your phone, take a picture of the slide, or write this down. This is really important. To me, the biggest benefit of the candle is that it displays not only price action, but investor sentiment and investor emotions. Okay, we could also consider that to be investor footprints, but I like to think of it investor sentiment and investor emotions. This is the most important thing, and if you can consistently use it that way, you have a huge edge over the rest of market participants. So a couple more things on the candlestick before we look at examples. Besides the fact that they just work, the formations are very easy to spot once you've kind of trained your eyes a little bit, and it's really not hard. And it's all about decision making without emotions. This is really, really, really important to understand. The candlesticks, if we use them correctly, they're giving us a way to trade completely without emotions. In fact, they force us to leave our emotions aside. You have very defined risk and very clear stops, right? Now, I chose a picture of this person here for a reason. You can see he or she's got some very, very defined risk, and you know what? I'm going to take the pointer here, okay? She's got some very, very defined risk, because if she goes beyond this point of no return, what happens? I mean, obviously she falls down, but her risk goes from 0 to 100% in 1 second, right? That's it. There's no, you know, in 50%. And it's the same thing with candlesticks. We know exactly where we need to get out. There's no second guessing. We know it exactly. And also we know the price targets for the most part. So let's look at a couple types of candles to start really building this so you guys can start using this tomorrow when the market opens again. Okay, so here's what we call a hammer candle. And like I said before in the beginning of the presentation, there are way too many candlesticks out there and way too many funny names that people come up with these things. And quite frankly, it's confusing, it's distracting, and it's completely unnecessary. So instead of giving you 4 different hammers, let me just tell you that they're all the same, okay? Let's focus on the one up here. This is your basic hammer candle. Let me kind of walk you through what this means. Now, again, we're focusing on a daily time frame for right now. And on a stock. So let's assume this is a stock here, okay? And let's assume this stock had been dropping or selling off for the past, let's say, a few days, maybe it was the past few weeks. So the bears had been in control. Well, on this day, the stock opened here, okay, at this little flat here, and the bears, the sellers who had been in charge over the past few weeks, actually pushed the stock lower, all the way down here. But something happened intraday, and the market rebounded back higher. So much so that the stock actually closed maybe up for the day, or at least at the very upper end of that day's trading range. So there's two ways of looking at this. Number one would be what I consider to be the financial television or the financial media way of looking at it. And that's to say, well, we're off the lows, Joe, back to you. In other words, you know, we're off the lows, and there's nothing inaccurate about that. We rallied off the lows and we closed higher, but it's completely understating what actually took place. Because what really took place is that the sellers who had been in charge for the past few days or weeks, they tried their very best to push this stock lower one more time. But guess what? Down here, they lost control of the ball. They lost control of the game. We basically had an interception here take place, if you want to use football terminology, on part of the Bulls, and the Bears completely lost control. The Bears exhausted themselves. There was no more selling left in this time frame. And so the only thing that can happen when the sellers exhaust themselves, what's the only thing that can happen? If there's no more sellers left, what's the only thing that can really happen, right? It has to rally. It has to go up. Or I guess it could go somewhat sideways. But the point is here, we've reached the maximum point of bearishness. The last of the bulls that needed to sell, they sold here, and that's it. There's no more sellers left. If we can consistently pinpoint these points of maximum bearishness and maximum bullishness, I'll show you in a minute, we have a huge leg up on the rest of the market. Let's look at another example, and here let's look at what I call a bearish example, okay? And we said before that we don't really pay too much attention to all these funny names that people assign to these candlesticks. But in this case, as you'll see in a second, the candlestick we're looking at is called an engulfing candle. It actually kind of makes sense. Either way, let's again assume we're looking at we're looking at a stock, and we're looking at 1 day's worth of price action here. But the stock had been rallying, let's say, for the past few days. Maybe it's been a few weeks or so. And ultimately, you can see the stock gapped up and rallied one more time at the beginning of this day up here, right? So the bulls have been rallying the stock higher, and ultimately we came up here and they gapped the stock higher one more time. Well, something happened, and the market completely reversed intraday, so much so that it closed near the lower end of that day's range and completely engulfing the previous day's price action, and obviously giving up that rally that the stock had initially at the open beginning of the day. Well, again, there's two ways of looking at it. If you look at through the lens of the financial television, at least the way they talk is, we're off the highs, Joe, back to you. And again, there's nothing incorrect about that statement, except for the fact that it completely understates what actually happened. What happened is that the bulls, who had been in charge here for the past few weeks, let's say, completely ran out of steam. The bulls ran out of steam up here. There was no more buyers left in this time frame. And when the bulls exhausted themselves, okay, this is our point of maximum bullishness in this time frame, okay? And if we can consistently pinpoint these points of maximum bullishness and back to we have a huge leg up on the rest of the market participants, okay? Now, I would like to ask yourself to hold on with your questions. We're going to do an extensive Q&A, okay? But we're going to get to that very soon. So let's continue. What we're going to do here for the next couple of slides is we are going to look at a couple of bullet points, and we'll look at the charts. So first, we're going to look at the S&P 500, okay? And what we're going to be looking at here is a waterfall sell-off, which is followed by exhaustion selling, a strong bullish reversal, and ultimately a bullish continuation buying day. Okay, so let's have a look at the chart. So what we're looking at here is the S&P 500, and at this point here, you can see we had some extreme emotions taking place. But first, let's understand what happened. Well, this was a period of time in the S&P where we can see it was very clear selling for really a couple of weeks, right? Very strong selling. Exactly, this was in 2014. And you can see ultimately the sellers got very exhausted, right? And you can visibly see that. You don't need a phone call from Goldman Sachs. You don't need 1,000 indicators. You can tell when the sellers are getting exhausted, right? And this happened 2 days in a row. The sellers tried their very best to push that market lower one more time, and you can see that 2 days in a row actually, and they failed to stay down there, and the market rallied right back. Well, the key to all this here is the follow-through buying day. On day number 3, you can see that the buyer stepped in and confirmed that the sellers had run out of ammunition, okay? And this is the kind of point in time that we're looking for. The extremities of emotions are very clear, but none of that matters unless we have follow-through buying, okay? Let's look at another example, okay? We're just going to get right to the chart on this one. What we're looking at here is the BKX. It represents basically banking stocks. And by the way, as a quick tip, I would encourage everyone to watch or follow the banking stocks very closely through the BKX. It's a very important part of the market to always keep a close eye on. What you see here is the BKX had been selling off and put in a low here, and then it kind of went sideways. But notice what happened on this day. You can see that the stock, or in this case the index, the sellers tried their very best to push it lower one more time below these lows here. You see that how they try to do that? But guess what happened? And you can see it visibly. Again, you don't need a phone call, 1,000 indicators. You can see it visibly. The sellers ran out of steam. The bears tried their very best to push this market lower below this point here one more time. So the extremities of emotions are what we're looking for. The bears have exhausted themselves. There's no more sellers left, right? The market rallied back close at near the upper end of its trading range. The very next day, we had an up gap and a follow-through buying day. And as you can see, the rest is history, okay? We're looking for the extremities of emotions, and those are extremely visible if you know how to read them and you use confirmation. Let's look at another example here, and we're going to look at the gold ETF, the GLD. Let me just go right to the chart here again. You can see the GLD, or the gold ETF, had a very nice rally here for a couple of months, and ultimately in the last few weeks, it kind of steeped a little bit. And what happened here after the rally, you can see on this point in time here, the bulls tried their very best to rally one more time. You can see that the bulls tried to go in and possibly push gold price, or the GLD, back up here, but you can see that they miserably failed to do so, right? You can visibly see that by the fact that after attempting that rally intraday, they actually closed gold lower on the day and gapped it lower the next day with follow-through selling, and the rest was history. So again, what this is showing us is that the bulls have run out of ammunition. There's no more buyers left, and that's your extreme emotion. If you can pinpoint these points on a consistent basis, folks, you have a huge advantage over the rest of the market participants. Okay? Really important, and that's what we're going to focus on here on the next examples. Like, we're going to skip this example here in the interest of time so I can show you guys some more real-time examples. But what I want to do right now for just a couple of minutes is go through the 3 steps to the trade before we look at a lot of real-time examples so you guys can see how this works. So as you can see, it's not just theory. I'm not just making this up. It actually works. Okay? So number one, I think it's really, really important, having come from an institutional backdrop, I have learned that it's really important to not just look at a chart without any respect to anything what's going on. It's important, step one, to understand and have a bit of an idea of what's going on in the broader market picture. What does that mean? Doesn't mean you have to take go to school and get a degree in economics, but it does mean you have to have a bit of an idea of what's going on in the broader market. Where are we in the cyclical bull or bear market? Where are we in the cyclical bull market? Where's the economy? What are interest rates doing? Maybe what's the political environment? Like right now, for example, I think we're quite late in a cyclical bull market expansion in the U.S. markets and in European markets. Interest rates, although very low, are marginally slowly starting to creep up, at least in the U.S. So that's kind of where we are. Okay, from a political perspective, we're still kind of trying to find our footing here for the most part. At least that's how a lot of markets are looking at it. But that's kind of the basic, environment we're in. Well, once you figure that out, you need to make sure you look for stocks that are acting well in this specific environment, right? So right now, we're looking at late cyclical stocks that are the kind of stuff that you would probably want to focus on. Okay, and step number three, you then look for those strong bullish or bearish reversals that I just showed you. And we'll show you guys a ton of examples in just a second. And by the way, and I wasn't going to say this, but as a quick freebie, I'll tell you, you can actually reverse engineer the process, which is to say, and you guys will see this in a second, you can actually look for strong bullish bearish reversals, then make sure whatever the bullish or bearish reversal is that you find fits in the group of stocks that you're finding that works in the market environment that we're in any given point. So let's take this and put it into real-time practice, okay, or real-world practice. And what you can see, we're going to go through the step 1, 2, 3 process. And what we're looking at here is the S&P 500. The S&P 500, you can see this is the chart we looked at before, 2014, when we had a pullback. At the time, I got a lot of phone calls from clients, from hedge funds, all over the place, all of our global clients, and they were all asking me, hey, Serge, is it time to sell our stocks? And I said, listen, let's do our step 1 to 3 process. And sure enough, that helped. So what we did is we understood, listen, the broad market from a structural perspective, we continue to see an expanding economy at this point in time, 2014. We continue to see an environment where the Fed was accommodative. And from a technical perspective, all we did is retest a multi-year uptrend, right? And step number 3, I said, we actually ended up having a bullish reversal. So what I told my clients, like, listen, let's wait for a weekly close. Let's see how the week closes. And sure enough, we had a long exhaustion candle. The following week, follow through buying. I gave everyone the green light to buy, and it was off to the races. Now, again, to be clear, this is not to pat myself on the back. What I am telling you here is that if you have a process that gives you perspective, you have a huge edge on the rest of the market participants. Okay, same thing here. Well, the KBW Bank Index. Remember before we looked at this index, and we looked at it from a step 1 through 3 process here. The point in time I showed you before when the bears got very exhausted was this point right here. So from a broad market structure perspective, what happened here at that point in time, I think it was 2015, was that the Fed was getting quite hawkish. They were talking about potentially hiking rates later on that year, which they did. They actually ended up hiking rates in December 2015. That's not that long ago, right? And because of that, the broad market structure is important to understand. Well, step number 2, the technicals, look at where that bounce happened. It happened right at a multi-year horizontal support line. And number 3, obviously, we had a strong bullish reversal. The bears got very exhausted, followed through buying the following week, and was off to the races. Okay? So that's our 1 through 3 step process. And now we're getting to the really exciting stuff, folks. This is really, really, really important. What I'm about to tell you took me, I want to say, probably 5, 6, maybe 8 years to actually really understand. Okay? So I don't want you to do this. I don't want you to focus on just 3 or 4 stocks or a couple of currencies or 1 or 2 commodities, and then you take every trade signal that you get. Okay? That doesn't work. Really high probability signals only show up every so often in any given stock, index, currency, or commodity. Okay? So a lot of people will say, I have a watch list of 5 or 10 stocks that I like, and that's it. They have a very, very low probability of actually making money over time, because truly high probability setups, and I mean truly high probability, not some sort of 50-50 coin flip or 60% chance kind of thing. I mean stuff that's going to work 80, 90+% of the time. Those only show up every once in a while. Any given stock, index, or currency is going to only give you a really, really, really high probability setup, maybe, and I mean maybe, once a month, more like maybe once a quarter. That's it. Okay, so by only focusing on a couple of stocks, you're completely, narrowing your focus, and you're gonna which means that most of the trades you're gonna take are actually, by definition, low probability. Okay, so this is a very low probability strategy, and it's also going to get you to overtrade. You don't want to do this. Okay, what you do want to do is look at the world as your oyster. Okay. Find a very high probability strategy or signal, such as the bullish reversal that I'm showing you here, and I'll show you guys a ton of examples in just a minute, okay? And then you look for that signal across the universe of stocks or commodities or currencies. Let me ask you a question. Why do you guys think that hedge funds are set up the way they are? Look at any good macro hedge fund. Why are they set up the way they are? In other words, why are they positioning themselves so they can trade anything and everything? It's because they understand this very basic principle. They understand, as much as there might be new opportunities, new really, really good opportunities setting up every single day, week, or month, they are most likely not going to happen in that same stock or that same currency or that same index all the time, okay? So there are, to be clear, there are tremendously high probability setups every day happening, but they do not happen in the same stock or the same index or currency. And it doesn't matter what the time frame is you're looking at, okay? This is really important. It took me, like I said, I don't know, 5, 6, 7, 8 years to really, truly understand it. As soon as I started understanding that and I started broadening my horizon, my P&L started taking off, and my drawdowns really, really got very, very small. Okay, so let's quickly review the strong bullish and bearish reversal before we look at a ton of real-time examples that you guys are really going to love. The strong bullish or bearish reversal, the strong bullish reversal takes place when sellers get exhausted. The strong bearish reversal takes place when buyers get exhausted. In other words, when the last of the buyers buy or the last of the sellers sell. That is the point in time that we're looking for. But none of that really is any good unless we have price confirmation. But if you take that and you use price confirmation, follow through buying, follow through selling, as I'll show you guys in a second, you are going to get what, in my opinion, is by far the highest probability spot to buy or sell any given stock, index, currency, commodity, what have you. Okay? So I've never really been a fan of indicators. I remember working at JP Morgan, and we had guys coming in showing us their latest and greatest tools, and nothing ever really worked on a fairly consistent basis. A lot of it was kind of, very complicated, and it took way too much babysitting. So I've never really been a fan of this, but I had been doing this for a long time. I think it was about 5 years ago, and I kind of thought to myself, hey, Serge, you've done this for a long time. I wonder if we can have some of the basics of this stuff programmed. So I actually talked to my buddy, who's a very smart IT person. I said, listen, I don't like indicators and all these kind of things, but I wonder if we can find a way to program this very specific part. He did. He came back a few weeks later, and it took us another 4 years to finally, get it great. But, it was amazing. So it was a multi-year project. And I asked him to program these signals, and what we now have is a very high probability, straightforward buy and sell indicator that signals the strong bullish and bearish reversals on the charts, the ones that I just showed you, but with a very specific setup. The indicator is not made up of a crazy amount of complexities behind it, but it's the combination of things in there that took us so long to get right. So it's absolutely beautiful. And let me show you a couple things here. So, for example here, this is shares of Tesla. And I'm going to show you guys real-time examples in just a second as well, okay? But this is Tesla. And you can see here we got beautiful, just red down arrows, very simple, and the stock proceeded to drop about 18, 19%. How about here in this stock? We had a sell signal, and the stock dropped a quick 13%. Then we got a buy signal, and the stock rallied about 15%. Well, a few days later, we got another sell signal here. You see that red arrow? And the stock dropped about 15%. How about here in Starbucks? We got a beautiful sell signal, stock follow through selling, and the stock dropped about 7%. IMAX, beautiful buy signal here, follow through buying, and the stock rallied about 8, 9, 10% very, very quickly. How about Apple? A lot of people like to trade Apple. Beautiful buy signal, follow through buying, and stock rallies a quick 5, 6% very, very quickly. Okay, so after a while of using this, I was so blown away I could hardly sleep for a couple of weeks. I remember. I said to myself, listen, I'm not necessarily considering myself a lazy person, but I know we all try to kind of make our lives as easy as possible. So I went back to my buddy and said, listen, would it be possible for you to figure out how to program this so we can scan for these opportunities so that all I have to do in the morning is come in and look and see if there's actually viable opportunities? So he did. He came back. This actually didn't take him very long. And we now have this scanner that looks for these opportunities, for these signals, and it's absolutely beautiful. It just literally finds the opportunities with a simple click of a button. So let me show you. So, and by the way, this has actually, I used to spend, honest to God, I used to spend 2+ hours a day searching for trade ideas. And now, honestly, I wrote 20 minutes here, but I don't think I spend more than 10, 12 minutes a day looking for opportunities. It's that straightforward, okay? But let me show you, this all sounds nice and well, but let me show you, some real examples, okay? So what I do every morning is I come in and I get my watch list here from the scanner, and I simply click on the results, and then I put the chart over here and see if there's a trade signal. So let me show you like a real-time example. So for example, here is like one of the bearish. This is real time, okay? So all I would do is put my chart over here and just kind of flip through opportunities and see if there's something valid. And you can see here in Domino's Pizza, we had a beautiful buy signal here with follow-through buying, and we're now actually watching this for a potential sell signal, but we need to follow through selling one. So it's very, very simple and straightforward. So now what I would like to do is I would like to ask you guys, just so you can see that this works, and I'm not just randomly making this up, type in some tickers, some stocks that you would like me to look at, so I can show you guys how this has worked in any given stock that you're typing in. Again, I want to make sure that you see that I'm not making this up, that it actually does work. Okay? Okay. So let me just go to the live examples here. All right. All right. A lot of questions coming, a lot of tickers coming in. Great. Okay. Let's start. Yeah. So small caps. Sure. Let's look at the Russell 2000. Okay. I'm only just looking at the Russell 2000 right now, and you can see here, for example, we had let me make this a little bit larger. Okay. A sell signal here, and follow through selling, and the Russell 2000 dropped. A buy signal here, follow through buying, and the market rallied. Very small selling here, but really no follow through selling, so this one you would have ignored. Okay, again, watch. Okay, and I'll show you guys some intraday time frames as well. Okay, just give me a minute. I'll show you guys the day trading time frame. I'll show you guys the daily time frame. I'll show you everything. Okay, it's just I want you to see that I'm not making this up. Sell signal, the stock falls. Buy signal, the index rallies. Okay, Russell 2000. This is Casey that just asked that. Okay, other examples. Let's see here. Semiconductor stocks. Sure, semiconductor stocks. Here, we just had a buy signal take place on the 30th of August. Follow through buying, and since then the SMH has rallied 5%. You see that, Michelle? Excellent. Okay. Excellent. All right. How about gold? Right. A lot of people want to know gold. Let's look at the GDX, for example. It's a little bit more volatile. How about here? We had a buy signal here take place on the 11th of July. Follow through buying, and well, you can see the rest is history, right? We had a very strong rally. You see that, Casey? Oh no, that wasn't Casey. That was Jeff, I think. Great. How about Xilinx? Okay. Yep. Let's have a look at Xilinx. We actually just had a buy signal there as well. Buy signal in Xilinx. We look at the indicator. Follow through buying, and the market rallied. Let's see, 9% or so ever since. Again, I'm just taking the tickers you guys are typing in here. All right. Let's see what else are you guys looking at. Steve, let's look at AMD. Sure. Let's have a look at AMD. Okay. Look at this. Buy signal here. market rallies. Buy signal here, market rally. Sell signal, market falls. Sell signal, market falls. Sell signal, but no follow through selling. You would ignore it. Same thing here. And then it got very, very choppy, so you'd ignore it. Okay, so just look at it here. Okay, buy signal, sell signal, sell signal. All right. Good. Grasso. Excellent. Yes, I'm going to show you guys some intraday stuff in just a second. Okay, just give me 1 second. Tesla. Yep, let's have a look at Tesla for sure. Okay, buy signal here. Market rallies. Sell signal. Market falls. Sell signal with no follow through selling, but then a buy signal with follow through buying, and we rally. Okay. Yes, okay. So now this is the daily time grids. Now let's show you some intraday stuff. Okay. Let me move to an intraday chart. I know a lot of you guys are asking for intraday stuff as well. Give me 1 second. Let me just open up the chart. Okay. S&P 500. Getting a lot of questions on S&P 500. I guess it's intraday you guys want to look at, right? Those are the S&P questions, intraday. Sure. Okay. So let's look at so intraday, you're going to get a lot more signals, right? Because you're just looking at 1 day. For example, sell signal, this is just a couple days ago, I think, and the market dropped. Okay, buy signal, but you need follow through buying and follow through selling, right? If you do one successful day trade, you've made your day. But the key is that you're going to get these signals. Sell signal here, and then the market dropped. Buy signal, we rally, and so on and so forth. Okay, this is just the other day. Russell 2000 as well. People are asking. Sure. Let's see. 1 second. Yeah, same story here. Okay. Sell signal, market drops, ultimately resume. Okay, same thing. No, this has not become a better trade. This is something different. But I appreciate you asking. NVIDIA intraday. Okay, 1 second. Let me just type that up. NVIDIA. Okay, yeah. Okay, this is really cool, guys. Check this. This is NVIDIA intraday. Okay, here we actually get some buy signals before, right in the open. But check this out. This is the buy signal we get at the beginning of the day. This is just a couple days ago, and the market, NVIDIA ended up rallying 2+%. This is intraday. Okay, that's a day trade. Okay. All right. Excellent. Okay, what else? Let's see. Apple. Apple. Pull that up. Same thing here. Buy signal right before the open, actually, and then look what happened. Follow through buying based on this. Boom, off to the races. You guys see that? Apple rallied a quick 1%. Okay. This is going to work in any time frame, folks, and in any asset class. Because if we're not looking at any specific we're not looking at anything that's specific to an asset class. Okay, let me show you the Tesla intraday. You guys want to see Tesla intraday? Okay, let me show you. All right, here's Tesla intraday. Buy signal here, rally, sell signal, sell off, and then it got choppy and there was no follow through for the rest of the day. But again, all you need, as you get anyone at day trades, you need one successful trade a day and you're good, right? So, okay. All right, cool. So let's see. We'll do a lot more examples in just a second. But what I would like to do, I'd like to offer you guys my Ultimate Candlestick Bootcamp. What this is it's going to show you my institutional three-pronged trading approach. It's all about teaching you a low-stress, high-probability swing trading method. And you're going to learn how to nail reversals by correctly reading investor sentiment and emotions using candlesticks and much more. Now this comes with a 30-page course guide, beautiful charts like I'm showing you here. It comes with the indicator and the scan. I'll show you in just a second. Okay, and it's an 11-part recorded video series. All you have to do is go to thestudytrader.com/green. Okay, let me quickly tap that in, and I'll show you. There's a ton of stuff included here, and we'll do a ton more examples in just a second. Okay, let me just show you. There's a ton more examples coming. so you guys can really learn how to start using this. Let me just type this in, .com/green. So all you have to do is go to the StudyTrade.com/green. Okay. Now, with this, you're going to get bonus webinars, okay, like live bonus webinars. So this is a recorded video series, 11 videos, 30-page course guide. It includes the scanner and the indicator, which I'll show you more about in just a second, okay? And it includes bonus webinars. So the next bonus webinar, we're going to do bonus tips and tricks to show you a lot more stuff where you can get to ask live questions. I'm here as well, even for personal phone calls if you like. It's going to take place on Friday, October the 4th at 11 a.m., 8 a.m. Pacific, and it's always going to be recorded, okay? So even if you miss it, you don't have to worry about it, and we do these on a rolling basis, okay? Now, who is this course not for? I don't think this is for people who are just looking at this for fun. If you're not serious about it, I would prefer you not purchasing this, because it really is only for people who actually want to make money in the market and learn a process that works. So here's a testimonial. It doesn't really matter. I'll skip quickly. But what you're going to learn in the course, and again, we'll talk about the indicator and the scanner in just a second, but in the course itself, you are going to learn an institutional three-pronged trading approach and all the variations of the bullish and bearish reversals, not just what I showed you here. You're going to learn how to use candlesticks to trade both in the direction of the trend and against it. You're not going to have to learn all sorts of different kind of patterns. We're just focusing a few things, because only a few things actually repeatedly show up when you use candlesticks, okay? Now, you're going to learn my rocket launch setup, my gravity pull setups. You're going to learn probability enhancers, an entire separate video on multi-time frame analysis and confluence zones. These are hugely important if you want to become consistent in making money in the market, okay? You're going to learn sideways channel breakouts, wedge and flag breakouts, trending gaps, support lines, moving averages, and oscillators, Fibonacci, all those kind of things using candlesticks and more. Okay, so this is really important because you want to be able to use all these things in conjunction with candlesticks and with the indicator as well if you want to. Okay, you can learn where to set your stops, risk management, some mental aspect of trading, money management, and just a ton of stuff included in this course as well. So, you know, it's really a full-on thing on candlesticks. Now, let's talk about the indicator. The indicator is included with this, and as are the live webinars, and the indicator basically, again, it shows us the qualified beat to reversal buy or sell signals and it just flashes on your chart and watch list. It's absolutely beautiful, and it works in all time frames, and it works in all asset classes. Okay, so what does it work with? It works, and I'll actually, one second, it includes the scanner, right? So it includes the scanner, and it's going to allow you to look for these high probability trades in literally in just minutes a day. The indicator and the scanner work for Thinkorswim, for eSignal, for TradeStation, and for NinjaTrader. Okay, those are the platforms that the indicator and the scanner work for right now. The course, if someone only wants to take the course, let us know. We'll make you a lower price offer. But if you want the indicator with it, this is what it works for. Okay, Thinkorswim, eSignal, TradeStation, and NinjaTrader. So I'm going to show you guys a lot more examples here in just a second. Okay, so let's kind of go through this one more time. Again, you are getting a full-on course here on using candlesticks the right way, a low-stress, high-probability way of trading in any time frame. Again, it doesn't matter whether we're intraday or longer term or swing. It really doesn't matter. It's all the same thing. Okay, so let's go through this a little bit more and show you some more examples. Okay, I can't show you the TradeStation platform because I don't have it, but it works in TradeStation. Obviously, otherwise I wouldn't tell you. We have, I don't know, probably hundreds of people that use it for TradeStation. Okay, does not work for TradingView, unfortunately. No. Let's look at some other examples and just really kind of make sure you guys can see how this works. So let's go back and look, for example, a lot of people are asking about Tesla. Okay, so let me go back to the daily chart just so you guys can see how this works. Okay, yes, the bonus webinars are always recorded. We do them all the time. So let's have a look at. Or actually, let's look at Xilinx just because I see even more questions of that. Okay, so here is, for example, a classic setup actually, and that's usually you guys are asking for that in Xilinx. This is just a semiconductor stock. Okay, this is forever, one time. This, guys, this is one time, and I'll show you guys some currencies as well in just a second. Okay, this is a one-time charge. That's it. There's nothing recurring. All right. what you see here in Xilinx is seller exhaustion. Okay, you can see that. This is seller exhaustion. This is just a few weeks ago. Okay, and you can see that the sellers visibly got exhausted, but that is useless unless you have follow-through buying. And you can see this is your follow-through buying candle right here. Okay, and ever since, Xilinx has rallied, like I said, about 9 or so, or 10%. Okay, the extremities of emotions has been reached here, and this also happened to coincide with with the red line here, which is the 200-day moving average. Again, you guys are going to learn much more about this and all the details of exactly how to use the indicator in the bonus webinars, and of course in the course. Okay, so again, just let me quickly repeat this, and by the way, if you guys have other tickers, let me know which stocks you want to look at. Okay, I want to look at all the stocks there and all the things you want. Let's look at some currencies in just a second. Okay, but again, this is just a one-time payment. That's it. It's not an ongoing thing. I believe if you purchase this, you'll get an offer to be able to try my Clubhouse membership for a month for just $7, where I show you guys real-time trade ideas and videos on a daily basis. But again, there's the bonus webinars included here. The next bonus webinar is on Friday, October the 4th at 11 a.m. Again, these things are always recorded. And yes, this works with futures. It works with stocks. It works with currencies. It works in any time frame. It doesn't really matter. Okay, it doesn't really matter what you're looking for, because it's not based on something that's specific to an asset class. It's based on human emotions, and that's why it works in all the time frames. Okay. All right. So let's look at a couple other examples here. All right. Okay. Let's look at dollar yen. A lot of people are asking about dollar yen here. Must be a lot of dollar yen traders. We had a buy signal here and follow through buying here. Okay. Dollar yen rallies. Then we had a sell signal, but no follow through selling. It's invalid. Ignore it. Sell signal, follow through selling, dollar yen drops. Okay. All right. You guys see that? Cool. Again, the exact details. I don't have another hour here, but I'll show you guys as much as example as I can here in just a second. So let's have a look. Let's stay with dollar yen. Might as well. Okay. Again, it doesn't matter what we're looking at. The buying point comes once you have confirmation at the end of this candle. You see the buying signal, but unless we have follow through buying, it is not a valid buy signal. Okay. You need to have follow through buying, and then you buy at the end of this candle. In this case, it's a daily chart, and you buy towards the end of that candle. Okay. That's how that works. You guys see that? Same thing here on the sell side, right? With a sell signal, follow through selling bar, a couple of bars later, you sell at the end or towards the end of that bar. All right? I see a lot of guys asking that. So that's how it works. But again, the reason why I created this is because I didn't want to spend hours a day looking for stuff. So what I do, this is truly exactly how it works. Let me just quickly go back to the other stuff up here. Okay. This is literally how it works. So all I do is take my watch list, okay, and I look for opportunities. I just click through them, because if you don't have that, I used to spend 2 hours a day looking for stuff. Like, honest to God truth, And this is all I do. So I just go through and I just kind of see if there's opportunities. So like right now, one of the things that we're watching is Domino's Pizza, right? And we had a buy signal here with follow through buying. Then we had a sell signal here with no follow through selling, so you ignore it. And now I'm looking if there's going to be a follow through selling candle. In fact, I'm going to set a bit of an alert here. Okay. Although I wouldn't need to, it'll show up on the scanner. And that's all you do. Okay. So the Clubhouse, for those of you guys who are asking about the Clubhouse membership is my monthly membership, where you guys will receive daily videos with daily trade ideas and walking through the market, making sure you're staying on the right side of the market. What I do in the club is I teach you guys to stop losing money, and then we start to teach you how to make money. Okay, you can't make money unless you first learn how to stop losing money. So the Clubhouse is really like a hand holding in. The Clubhouse costs $97 a month after the first $7 month trial, if you choose to continue. Okay. Cool. Okay, so that's literally, it's just that simple. We just go through the process. We find opportunities. We execute. We look, we qualify them, and then we execute if we get a valid signal that's actually confirmed. All right. So let's see. Sure, Chipotle Mexican Grill. No problem. Let me see 1 second. Why is this not showing up? Okay, so here is Chipotle. Sell signal, follow through selling, and we start dropping. A buy signal, but no follow through buying. They wouldn't take that. Sell signal, follow through selling, and we keep going lower. Okay. No PayPal, unfortunately. Yes, the webinars October 4th. Again, it's going to be recorded, guys. These are always recorded. These webinars. So don't worry. Again, it's not the only one. Sure, let's look at some steel stocks. Freeport McMoran, for example. Here's Freeport McMoran. Buy signal, follow through buying, off to the races. Okay. Yes, the watch lists. These are all the scanners. So like every day I come in and I just kind of flip through this and see if there's an opportunity. That's it. That's all I do. And I just see if there's follow through buying or follow through selling, which is what we need to get confirmation. Okay. No. So if you don't have one of the platforms, unfortunately, you can't use. But what you can do, you can actually download NinjaTrader for free, and that should allow you to use the indicator. So with NinjaTrader, that's what I'm being told. You can download it for free. That's what a lot of people do. Or you can try to download a paper trading account with Thinkorswim. That works as well. Ed. Okay. Okay. So again, the exact details, like I showed you, that's what the bonus webinars are for. That's what the class is for. But essentially, that's it here. So let me just go through the thing again. Again, someone asked about steel stocks here. I think it was Scott, and so I pulled up FCX. And again, buy signal, follow through buying. Again, you buy at the end of the candle, and that's it. And then you go for a few percent. You go into the technical parameters. Again, the details are in the course and the bonus webinars. I'm here personally also. If you guys want to talk to me by the phone, it's all here. Okay. I personally use Thinkorswim for this. That's just what I like to use for this. But again, it works for TradeStation. It works for let's see. It works for eSignal and NinjaTrader. Again, if anyone doesn't have one of these platforms, there's a NinjaTrader version you can download for free. I'm being told. And then you can use that. And also, I think I believe you can open a paper trading account. And by the way, if anyone doesn't want the scanners and indicator, the course, let us know. We'll give you the course for a much lower price because it doesn't. If you don't want to take the indicator and the scanner, okay. You can just send us an email. It says support@thesteadytrader.com. Okay. Excellent. Okay, let's look at a couple more stocks. Again, all I'm doing is I'm just taking stocks as you guys. Oracle, for example. Someone's asking about Oracle. All right, cool. Here's Oracle. Let me just bring it up. Okay, buy signal here, stock rallied, sell signal, stock drops, buy signal, stock rallies, sell signal, stock drops. You guys see this? Kevin was asking about Oracle. Again, I'm not making this up. I'm just literally just taking signals that stocks that you guys want. Buy signal, stock rallies, sell signal, follow through. Again, the follow through buying and selling is important. Follow through selling, stock drops. Buy signal, follow through buying a stock rally, sell signal, follow through selling a stock. Whew, I'm talking fast. Sell signal, follow through selling a stock drops. You guys see that? Does it make sense? All right, perfect. That was for you, Kevin. How about Steve wants to look at, what is that, Steve? Celgene. Okay, sure. Here's Celgene. Let me show you. Okay. Celgene, buy signal, follow through buying, stock rallies. You see that? Buy signal, follow through buying. You buy at the end of the follow through buying, stock rallies. And again, the reason why I have this indicator built because I don't want to look at the market the whole day. This allows you to find the opportunities. And then sell signal, no follow through selling, ignore it. Sell signal, no follow through selling, ignore it. Right? That's why we only take the ones that are actually qualified. Again. We talk about all that stuff much more in the bonus webinars, in the in the course, you learn a lot more. And again, I'm here for you guys as well personally. If you guys want to get on the phone, you know, I'm not holding anything back here. Sure. Let's see. What else you guys want to look at? Let me have a look. Kind of flip back in the. 1 second. Okay. All right. So let's do a currency or two. Okay. So here's, for example, euro dollar, buy signal, follow through buying, rally, buy signal, follow through buying, rally, buy signal, follow through buying, but didn't last very long. But we didn't get stopped out here, and so you see all you guys asking about currencies. It's the same thing. Okay. The ultimate bootcamp itself. Let me see here. I'm responding. Let's see, Charles. I'm responding to you there. Okay. Yes, it's gonna find any stocks that you want. You know, as long as you put it in the scanner parameters. So, like to me, I like to only look at very large cap liquid stuff. That's what I like to do. You know, did you guys see that? Who was asking about currencies before? Dominic and other people. It doesn't matter on the time frame, guys. What depends is the market environment. If you have a choppy market, you shouldn't be trading. Okay. If you have a market that's moving, then this is going to work wonderfully well. That's why you have the scanners, to find stuff that's actually moving. Does that make sense? Excellent. Yes, you're very welcome. You're very welcome, guys. Let's go back to the daily chart just to kind of show you guys some other ideas here. All right, great. Sure, let's go back to Tesla again. Some people are asking about the Tesla example from before. Yes, actually, 1 second. Yeah, okay. So let's, again, show you the Tesla example. You can see here, sell signal, follow through selling, we drop. Buy signal, no follow through buying, then made a buy signal and follow through buying. Even though we traced, we never broke below the lows here, and we rallied in a sell signal, follow through selling, and we drop. Okay. Lionel, yes, please send us an email. Anyone that has a more increase, send us an email, support at, let's see, at thestudytrader.com. Okay. Yes, this is, no, listen, okay. So Charles, if you only want the course, that's a different thing. But if you want the indicator and the scanner, this is the price. Okay? This is the price for the course and the indicator and the scanner. Okay? Excellent. Apple, yeah, Apple's been very choppy, but we did get a buy signal just the other day, a small one here, and we would follow through buying, and then we rallied a little bit. But Apple's been pretty much dead money since, so I wouldn't have want to touch that anyway. All right. Excellent. Sure, let's have a look at Facebook. Okay, here. Let me show you Facebook. We had a sell signal with no follow through selling. Okay, same thing here, but then we had a buy signal with follow through buying here, and as you can see, we ended up going off to the races. Okay, yeah. So the next bonus webinar. The next bonus webinar is Friday, October 4th at 11 a.m. It's recorded. You know, I'm here personally if you guys have any questions, and that's the deal here. What else? Let me see. Let's go back to semiconductors. I'm getting a lot more semiconductor questions. SMH, yep. We just get a buy signal the other day. Buy signal here. Follow through buying and off to the races. You see that? You see that? Who is this? Linda. Very good. Yeah, that's it, guys. I mean, you know, can't make it any easier. This is what I do. Again, it's just a matter of scanning the market using the indicator and just looking for opportunities every single day, and then we sure, oil, no problem. Let's have a look at oil. USO, sell signal, follow through selling, market drops. Buy signal, follow through buying, market rallies. And now we're waiting for a sell signal. We had a weak one today, but I guess a bit of a one. You see that, David? Yes, there's step-by-step instructions how to install the indicators. Absolutely. Yeah. You see that, David? Am I as you can see, I'm not making this up, guys. All I'm doing is I'm taking the tickers you're giving me and I'm typing it in. All right. Excellent. Very, very good. Okay. Sure. Russell 2000 months. I got a lot of Russell questions here. That's great. Here, Russell 2000 sell signal, follow through selling, market drops. This is just the past few weeks. Buy signal, follow through buying, market rallies. Here we had a sell signal, but we had no follow through selling. Like nothing, certainly nothing significant. So I wouldn't have done that trade. Okay. Excellent. Lionel, did you see I responded to your question? Lionel from Canada. Excellent. AMD, sure. Let's have a look at AMD. Okay. AMD buy signal, follow through buying, market rallies. Buy signal, follow through buying, market rally. Sell signal, follow through selling, small drop, and then sell signal, follow through selling, and the market drops. Right? It works. I just went through about 10 minutes of showing intraday charts before. Who's asking this? Roy. Do you guys want me to show you one more intraday thing? Yeah, okay. I'll show you guys a couple more just to go back to some of the examples before, if I can remember them. Here. All right, so let's have a look at some of the questions before. Sorry, let me just quickly go back into them. All right, and again, it doesn't matter what the time frame is. It doesn't matter the asset class. It just works because we're looking at human emotions. Buy signal, follow through by. This is an intraday chart of Apple just the other day. Buy signal, follow through buying, and we rally. The sell signal is not valid here because we have no follow through selling. Okay, and all we're doing, we're looking for these extreme emotions through the lens of candlesticks, right? Okay. You guys see that? Who was asking that before? I think Roy. Yeah. And again, I mean, I could go through another 10 of these. We just did it before, but it doesn't really matter what your time frame is. It works in any time frame in any asset class. Yeah, you're very, very welcome. All righty. Excellent. Okay, let's do one more example just quickly. Let's see, what were people asking for? Yes. Let me see. I'm trying to find a stock that maybe everyone likes to know. Yeah, Maria, that's a good question. Maria's asking, when does the follow through buying have to happen? That's all in the course, okay? In the course and bonus webinars, again, I've reached my 1 hour mark here. I shouldn't go much past the hour mark, but that's what the course and the bonus webinars are for. That's the course guys are there. I'm here personally as well. If you guys have questions, you can literally call me up. So I'm not holding anything back. I just want you guys to make money. It's pretty much as simple as that. Let's go to the Xilinx again, just because it's a lot of semiconductor stocks have triggered of late. So I'm getting a lot of semiconductor stocks questions. Excellent. Welcome aboard, Don. Would be great to have you. Seller exhaustion, again, through what I just showed you for the past hour. Maximum bearishness gets reached, follow through buying, and we're off to the races. Okay? Excellent. All right, guys. Well, listen, I want to thank you very much for attending. This has been a great fun showing this to you. Hope you can take me up for the offer. Again, it's just a one-time fee. There's nothing recurring here on this. But again, there's a lot of stuff included, so you can really start to nail these things. would be great to welcome you aboard. Again, it includes the bonus sessions, it includes the indicator and the scanner. If you have the platforms, if you don't have the platform, you can, like I said before, you can download you can download NinjaTrader for free and install it. And I believe Thinkorswim has a paper trading as well that you can download, so you can use the indicator. So it's all there. It's all here. And again, after showed you tons of examples, I'm not making this up. I literally just took tickers and I showed them to you. So hope to see you guys there. If you have any questions in the meantime, it's support@thesteadytrader.com. Thank you very much and have a great rest of your day.